Hello, this is Brian Resney, president of Resney Wealth Management. It's question and answer day, and one of the questions I get often, and I've been receiving quite a bit lately, is about general diversification and asset allocation. If most of you have watched any of my update videos or watched my TV show or listened to my radio show, you know that I am not a believer in what's called asset allocation. Asset allocation is what's called an over-diversified portfolio. This is practiced by all the brokerage firms, the banks, and the insurance companies. It's called spread it out everywhere. The problem with asset allocation is half those assets are negative year to date, 10 or 12%, and the other half are, let's say, slightly positive or flat. You've got a big negative return. Relative strength, in our opinion, works better. Relative strength ranks various investment sectors. You own those stronger investment sectors based upon performance in the portfolio until it's time to change it up or those are not working. To keep it simple. So asset allocation is a failed pie. Own everything. The good stuff is dragged down by the bad stuff. Your ultimate return is bad. You look at asset allocation in the last 5 years, the stock allocation pushed again by Wall Street firms, banks, and insurance companies, it hasn't worked. While the S&P might be up, let's say, 8% a year the last 5 years, most asset allocation programs that we've looked at are up maybe 2% a year, significantly down from what the S&P has actually produced. So invest in what is working, not what is relatively weak. Remember, relatively strong sectors tend to outperform over various time frames. Relatively weaker sectors underperform. Asset allocation is a failed marketing approach, again, by banks and Wall Street. No real diversification is put into play. Your good assets are dragged down by weak assets. And by the way, in a recession, which I am very alert about and do a lot of research in my firm and about risk management for recessions, asset allocation, you're always fully invested. You're not going to raise significant amounts of cash and get defensive. You're always invested. So even in asset allocation, while it hasn't made much money in the last 5 years on the upside, wait till the next recession hits and your portfolio still goes down 30 or 40% to the downside. Bottom line, asset allocation is a failed investment approach marketed by Wall Street banks and insurance companies. It should be avoided. If you're not a client of our firm, give our office a call, schedule a consultation. It's time for the difference we offer investors. Real investment management, which includes risk management. Have yourself a safe and profitable day, and make sure you listen to my live radio show this Sunday from 10 to noon. Have a great one.